This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. We did have a couple of economic reports coming in on the weak side. We had the New York Fed Manufacturing Index coming in on the weak side. And also we had the National Association of Home Builders Index also coming in lower than the estimate. However, we feel that the main trend is still higher, and even though we are lower currently, I think we can see a move back to higher on the day today. Also, we do have in the last month and a half, by my count, as many as 18 central banks around the world that have eased credit conditions to one degree or another, or in one form or another. So the historically low global interest rate environment should continue to support stock indices in the long term. Over in the currencies, seeing the dollar index under a little pressure. Seems that flight to quality longs are being liquidated on ideas that eventually the European Union and Greece will come to some type of agreement concerning the debt that Greece holds. Also seeing the euro currency trading a little bit higher, this due to reports that German investor confidence increased more than expected, but the pound lower after UK inflation numbers coming in at a 26-year low. In fact, this is the lowest level for UK inflation since records were first kept in 1989. Also, we did have recently a Bloomberg survey showing that analysts believe that the Bank of England will raise interest rates in the fourth quarter of this year. Our feeling is, how can the Bank of England raise rates with inflation levels as low as they are? So most likely the Bank of England will not be able to raise rates in the fourth quarter. And in the interest rate markets, further long liquidation taking place in the bonds on the feeling that eventually Greece and the European Union will come to some type of an agreement, thinking that the low for the bonds will probably result on news, whenever that is, that there is an agreement between Greece and the European Union. So I think that will be the buying opportunity, and I would hold off buying bonds until we get that news, which I believe will be forthcoming. Still thinking that the main trend is higher for treasuries, but we need to get the flight to quality long liquidation out of the way. Once that takes place, the bull move in the 30-year bonds, I think, will resume. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.